Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. As August comes to a close and we head into the month of September, rapidly surging global inflation, rate hikes, recession risk, they have now become three of the biggest and most anticipated money-making opportunities of the current financial climate. The most eagerly awaited central bankers gathering of 2022, and quite possibly the most pivotal moment in monetary policy that took place on Friday, with the Federal Reserve Chairman Jerome Powell officially declaring that a recession is on its way. Speaking at the Federal Reserve's annual Jackson Hole Economic Summit, Jerome Powell dropped a bombshell on the markets during his most hawkish speech to date, stating that the Federal Reserve is determined to fight inflation with more supersized interest rate hikes, which will inevitably weaken economic growth and cause some pain. This pain will involve widespread job losses and unemployment for a sustained period of time until the economy cools. Jerome Powell made it clear that the battle against inflation is not over and that restoring price stability will take some time and requires using the Fed's monetary tools forcibly to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be softening of the labour market conditions, whilst higher interest rates, slower growth and softer labour market conditions, they will bring down inflation, but they will also bring enormous pain to households and businesses. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain, stated Jerome Powell. Following Jerome Powell's speech, Goldman Sachs predicted that any slowdown in the labour market that will start to reflect in the upcoming non-farm payroll data during the fourth quarter of this year, as layoffs, hiring freezes, job cuts, they start to kick in, presenting savvy traders with very predictable and highly lucrative routine trading opportunities ahead. The Federal Reserve has now raised interest rates by a whopping 225 basis points since March, its most aggressive monetary tightening cycle since the early 1980s, and they certainly aren't done yet. Last month, the Fed raised interest rates by a supersized 75 basis points for the second consecutive month in a row. The biggest question now is, will the Fed raise rates by 75 basis points again next month, or will they surprise the markets with an even bigger 100 basis point rate hike? Only time will tell. However, one thing we do know for certain is that September FOMC meeting is now positioned to be one of the biggest trading events this quarter that traders will not want to miss out on. Elsewhere last week, natural gas prices, they snatched the headlines with a blistering gain that sent benchmarks on both sides of the Atlantic blasting through all-time highs. US natural gas prices, they skyrocketed above $10 to levels not seen in over 14 years, notching up a staggering gain of over 540% from this time last year. Elsewhere in the energies complex, the real star performer was European natural gas. The European benchmark has been on an unstoppable run this month, soaring to a record high of €343, racking up a phenomenal gain of more than 900% within the last 12 months. Put another way, that's the equivalent of US natural gas trading at $400 a barrel for crude oil, and European natural gas trading at more than $1,000 a barrel for crude oil. Prices are currently 11 times higher than they usually are for this time of year, and we haven't even entered the winter months yet, when prices would inevitably boom higher. Earlier on this month, a long list of Wall Street banks increased their bullish calls, predicting natural gas prices will more than double, if not triple, from the current prices over the next year. Interestingly, last quarter, Warren Buffett, who is arguably the world's smartest investor, revealed that his biggest investment ever is currently riding on commodities, specifically the energies. In the words of Buffett, the energy markets right now, they represent one of the greatest generational opportunities of our lifetime, not to be missed. And there's no denying that he's definitely been spot on. Extraordinary times, they do create extraordinary opportunities. Right now, as traders, we are living in some of the most exciting and rewarding times ever in history. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week macro-driven opportunities, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures so far this year, and we still have another 4 months left to go. If you've been kicking yourself for missing out on some of the biggest trading events so far this year, and you still want to make 2022 your best year yet, then you still have time. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. First of all, moving over to copper, which broke out to 7-week highs on Friday. We took the opportunity with our clients at the Gold and Silver Club to again scale out of more profits. We banked 440 points profit on one of our copper trades. We were building into copper from the middle of July. In fact, copper prices since then, they've rallied over 17% since the July lows, and we've continued to capitalize on these breakouts to the upside over the last couple of months here with copper. We've talked you through this multiple times where we've continued to build into positions on this market. We have also taken the opportunity in the last week to scale out of more profits on Brent crude oil. Last week, from the lows to the highs, we moved just under 1,000 points in a single week, so a $10 move for Brent crude oil. So essentially, we highlighted this to you at the beginning of last week as well. Any dips back down towards that 93, 92 US dollar per barrel level, back towards the swing lows, would be massive opportunities to accumulate further positions. And with that, we have seen a 3-day impulse move, which did take the price 900 points higher than the lows that we saw retested on Monday. So I do hope that many of you have capitalized on that. We managed to bank over 1,200 points on Brent crude oil with our clients last week over 3 trades. We built into those positions down at the swing lows, and we've subsequently had a solid surge to the upside, over 5% gainer for crude oil in the latest week here. Brent crude oil is now trading back above 100 US dollars per barrel. We've yet again seen hedge funds and money managers, they've increased their net longs in the last week by over 5% for Brent crude oil. And with that, we can definitely see that with the price action, with the highest prices that we've broken out to since the 2nd of August. So again, this played out perfectly within our expectations over the last week. Then moving over to gold, we talked you through this as well. Our expectation was that this market would be under pressure, particularly as you get towards the end of August, then you start transitioning into the month of September. Typically, the month of September is not favorable for gold or silver. What we're looking to do is accumulate at lower prices. I talked you through last week the expectation that any rallies would be short-lived. We were not looking to buy gold at these prices. We want lower prices in order to reaccumulate. Bank profits above the 1800 level on the CPI data, which was a couple of weeks ago, banking over 2,000 points over 2 trades there. Subsequently, we've had quite a tremendous sell-off to the downside, over 700-point pullback here for gold, all to be expected at this time of year. Then as we transition into the month of September, I'm looking to sniper in and build in at lower prices, especially if we come back down, retest the swing lows here. Once we start getting down to 1700 or lower, these become areas of interest for gold. It's similar on silver. Expectation has been here that we were going to see lower prices for silver. We haven't added on any of these pullbacks. We're looking still for lower prices as we transition towards the end of August into the month of September. Again, very similar to gold. I'm looking for a retest back towards the swing lows there to accumulate. If we can take out those levels, even better. If silver can get sub $18 per ounce, that would be ideal. If gold can get sub 1,700 US dollars per ounce, that would also be ideal for reloads in the month of September to capitalize. Alongside that, we've also hit our profit target on the dollar last week for 385 points with our clients, which ended up being the fastest breakout for the US dollar index since April of 2020, with the surge that we got after the CPI data. So just within the matter of a week and a half, we hit our 109 profit target, bang on for the dollar. In fact, from that level, shortly reversed to the downside, so it ended up being a perfect area for us to bank a windfall amount of profits, fast profits as well, with our clients at the Gold and Silver Club on the dollar index. In this new era of economic change, with rapidly surging inflation, the cost of living rising, energy, gas and food bills all soaring, it's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income-generating skill like trading, it's no longer a luxury. It's now a must-have necessity. In the words of Warren Buffett, the best investment you can make is in yourself. You can never lose when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills, and there's no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to massive levels. If you want to gain the ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators, that will not work. We're no longer in the 1980s, we're in 2022, and the age of data. Every industry right now, including the trading and investing landscape, is being disrupted by data. In this day and age, if all you're doing is relying on outdated technical analysis and gimmicky technical indicators, then you're guaranteed to get crushed and chopped up in these markets when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you have to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge, and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join a community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.